Let's now shift focus on Rebooting India, which is clearly our special segment where we talk about what the government needs to do to bring growth back on track, to bring back recovery, and of course, whether it's the markets, equity markets, investors around the world, everyone's keeping a close eye on the 28th of February, the budget, which will be presented on a Saturday this time around. After many decades, we'll have the markets closed on budget day, but markets are sure to react when they open on Monday. Joining me now, Pratik, Jain, partner tax at KPMG, to give us a sense of what we can realistically expect. Thanks for being with us here, Mr. Jain. Share with us in terms of the overall picture. Everyone is calling it a big bang budget, a game-changing budget, a budget that will really deliver, will take forward the reform process. Do you think the finance minister has room to do all that and more?
I think so. I mean, I think this is really the first serious budget for the government, because last year it was, they're just coming into power. In terms of key themes, so I think personally, yes, I think it will be a big bang budget. I think the whole world is watching us, and this is an excellent time for the government to do it. And they've shown enough political will to kind of take tough decisions. In terms of key themes, I think a couple of things. One is Make in India. There's a lot of debate happening as to while Make in India is a concept, what all needs to be done today to make that happen. And second, of course, is ease of doing business in India, because India does not, India is 142 out of 189 countries in terms of its ranking. So these are the two key themes to my mind. And of course, when we talk about Make in India, we talk about GST and tax reforms and correcting the inverted duty structure. So yes, I think it will be a big bang budget to my mind.
Okay, take us through each of these. You've talked about Make in India. Let's take that as a theme. You're very right, because whenever we talk to industry, captains or others and analysts, they all say it's all very well. The concept is taken up very well. It's had a lot of resonance. People are talking about Make in India, but now in the budget, it's the time for him to actually give those concessions or lay out the roadmap and the final blueprint to turn Make in India into a reality, into a success story. In terms of taxation, what can he do to really encourage the India manufacturing story?
So 2-3 things. One is that we need to have a clear roadmap on GST. And while we have announced that April 116 will happen, but what all will happen over next 1 year as we go along, when will the law come, etc., etc. Simplify taxes, remove some of these education cesses and other cesses and surcharges. Now they're talking about another cess called Swachh Bharat cess. I just do hope that good sense prevail and we don't have those kind of taxes. Other thing is to correct that inverted duty structure, where in many cases the duty on raw material is higher than duty on finished products, so that needs to be corrected. You need to have a lower duty on raw material and a higher duty on finished products so as to incentivize manufacturing. Also looking at what happens with large infra projects. How do we revive some of these projects which have not really taken off? How do you have more allocation for PPP?
I'm going to interrupt you here, Pratik. You've talked infrastructure, and we've got L&T, a large player in the capital goods space, coming out with its earnings. You've got the L&T management there explaining its earnings, but that clearly hasn't helped the stock that continues to tank, down over 6%. If we could quickly look at that counter one more time before I go back to my guest, down about 6% as we speak. So it's come under tremendous pressure, nearly 100 rupees off on that particular stock after it reported earnings that have missed the estimates. Let's go back to our discussion on what we can expect on budget day as far as especially the overall taxation theme goes. Pratik Jain is still with us, and he was of course talking about the larger Make in India theme and what the government can do to make that theme a reality. You mentioned a couple of things, the inverted duty structure and other issues that the government needs to sort out. What are some of the other incentives that can be given to really help boost manufacturing in India?
So I think we really don't have too much room for new exemptions to come in, right? But I do expect some kind of targeted incentives for at least new and first-time entrepreneurs. So they may come up with something like, if you have a investment up to, let's say, 25 crores or 50 crores, you would be entitled for income tax exemption for, let's say, 3 years or 4 years.
Right.
I think that is one
specifically
possibility.
Looking at small entrepreneurs and giving them a little push.
Absolutely.
Right.
Other than that, I don't think that and I don't think that investors are today looking at tax really sops. Right. I think what they're looking at is a more stable, predictable, and more transparent kind of tax system rather than very tax cuts at this point in time, because much of the debate has happened on the retrospective taxation and the complex tax system, then rather than talking about a very high incidence of tax in India.
So in that sense, both ease of doing business and Make in India go hand in hand, because on one hand you've got obviously Make in India that focuses on the manufacturing space, on ensuring that you're not giving an undue benefit to importing the products. In many ways, as you were telling me, the foreign trade, the free trade agreements, the FTAs with some countries are actually encouraging imports rather than manufacturing. So while that ties in, the other side of course is the overall regulatory environment that needs to be made simpler, which will not only help in terms of taking forward the Make in India concept, but facilitates ease of doing business as such.
Absolutely. So I think in some ways these two are related. Unless you simplify your rules and regulations in the country, investors will be reluctant to come to India. And you have today a situation where you have multiple laws, multiple sort of regulations, and it takes huge amount of time to set up business in India.
But is there room in the budget to address that?
Absolutely. I think budget may not go into too much of detail, but if there is an expression of interest, if the government says that okay, this is a committee which we have set up, in next 3 months it will study and definite timeline that next 1 year we will try and sort of improve the ranking, let's say from 142 to let's say within 100. I think those kind of things we are looking at. And of course in the budget what could happen is to look at some liberalization, look at some of the FDI sort of limits that you have. But really if this is on the ease of doing business, you're looking at more intent than substance in the budget.
Okay, so intent and simplifying the processes. Let's now talk about personal taxation and direct taxes. Is there room for him to give any concessions to the so-called Aam Aadmi, people who brought this government to power? Because there's always that expectation, what's in it for me, you know? So while from the corporate side we expect a lot as a long wish list, do you think he can give that little higher exemption limit for IT and all of that?
While there is a possibility, but in the last budget he had already given 50,000 rupees as additional amount for
so another 50,000?
Another 50,000 is a possibility. Looking at what real estate sector is going through,
right.
You might be tempted to increase the interest reduction by another 50,000. But beyond that, I don't expect any rate cuts or any substantial sort
tweaking
of
of the slabs or any of that.
Absolutely, because this is the second budget. Practically the first budget of the government, and I don't think it will be populist at all. So I don't expect as a common man to really get a lot of tax benefits in this budget.
Okay, let's quickly talk about MAT, because there's been a lot of worry expressed by corporates, especially in the special economic zone sector. Do you see that at least being addressed in this budget?
Yes, so while they may not touch the normal MAT except by, let's say, reducing the rate by a couple of percentage points, but there is definitely a case which industry has made out, and very strongly, that initially MAT was not there on SEZ, and a lot of investment has gone into SEZ, and later it was brought into SEZ, and it's creating a lot of issues for them.
Right.
So therefore definitely there should be a rollback of MAT on SEZ, or at least the tax rate should be reduced, or the limit that you have for carry forward of MAT, that needs to be increased. Because if you pay MAT and if you have a limit for carry forward and you don't make profits really, let's say for 5-8 years, then you've lost it. So I think we definitely expect some relief on MAT as far as SEZs are concerned.
So relief on MAT as far as SEZs are concerned, a nominal or a token or a modest relief for the average income taxpayer, just as a token in many ways. You're saying the larger focus will be on the big picture, making life easier for an industrialist, for an average businessman, in terms of how you get approvals, what's the ease of doing business, and encouraging manufacturing in India. So that will be the larger theme.
Absolutely. So I think Make in India will be the theme for this budget, and ease of doing business. I don't expect a lot of tax cuts, as I said, and within Make in India there are several things, tangible things that needs to be done, and on the infrastructure there has to be attempt to increase public-private partnership and look at the existing infrastructure projects and how do you revive those.
Okay, Pratik, very quickly, we always talk about concessions, and you're saying this time there's not expectation that there will be too much, but at the same time he has to give up something. This year has been a tough one for the finance minister in terms of trying to rein in the fiscal deficit, because revenues haven't been up to the mark. We're seeing corporate earnings every day giving us a picture that clearly revenues have been worse than expected. For the government, the revenues have been clearly, in terms of the collections they had expected not been up to the mark. So where does he collect money from? Because at the end of the day, expenditure is only so much he can curtail. The minute he will start cutting expenditure, especially on social sector schemes, there are question marks being raised on whether this government is only pro-industry and not pro-poor. So while he has limited room to cut expenditure, he also has to boost his revenues. So going forward, will we see any guidance there, any forward-looking statements on how he intends to change that picture?
Right. So as far as this budget is concerned, I mean, that's a tough one, because I don't think he has many avenues to collect more revenues. A couple of things which comes to my mind is to have some kind of duty on crude oil, because the crude oil rate has gone down significantly, and therefore we might be tempted to bring 5% duty on crude oil. That could give 10 to 15,000 crores to the government.
Right.
Of course, we're talking about spectrum allocation, etc. That will come anyway.
Right.
The other thing is to align some of the existing exemptions and rationalize those. So in excise today, for example, you have multiple exemptions, around 250 exemptions that exist today. And once GST comes in, a lot of these exemptions will go.
Right.
So this is the right time to kind of rationalize that, and to my mind, to increase the service tax rate also from 12 to 14, because service
won't that be a big negative? Won't you see markets tanking if you see service tax rate going up from 12 to 14%?
Not necessarily, because I think when GST comes in, the rate of GST on services would be anywhere between 16 to 18 or even
So
higher.
it's time to now move to in that direction.
Absolutely. So I think this is the right time to increase the service tax. And anyway, the growth which India is seeing is more on service sector, although you expect to have more growth on manufacturing now, but till date it is a service sector. So I think these are a couple of things that he can do in this budget.
All right, so don't expect a please all budget is what Pratik Jain is telling us. At the same time, it will be a budget that will address this government's pet theme, which is clearly Make in India. So is it a Make in India budget that we're looking forward to, is something we'll know only on the 28th. Many thanks, Pratik, for joining us and sharing your thoughts. And we're going to focus back on the markets now. Let's quickly take a check on where the Sensex and Nifty are at this point in time. Remember, markets have been under extreme pressure, 1.5% off on the Nifty right now. 85.25 is where it is, 135 points in the red. Sensex now down 500 points, so clearly trading at the day's lows, nearly 2% off there on that counter, 1.75% off on that index. So you've got L&T now that's down 7%. So the management there talking to us, but the overall numbers clearly not in line, and that has pulled down the index as well. Tata Steel among the other big laggards on the index. Essa Sterlite down 5% as well. So those are some of the big counters. We're going to focus back with our special market guest, who will be joining us after a quick break and take us through the closing and what has been clearly not a good session for the markets today.